Surprisingly tight supplies, higher prices ahead. The USDA September hogs and pigs report was a bit of a surprise. While many analysts expected some herd expansion as the prior June report implied greater slaughter numbers than observed since, this report's downward revisions of June 1st inventories by nearly 2% appear to be the alternative explanation. As such, the September 1st inventory of all hogs and pigs at 74.5 million head is up about 1% from revised estimates for last quarter, but down 1.33% from last year, well below the range of pre-report estimates. Likewise, market hog inventories are up about 1% from last quarter, but down 1.33% from a year ago, while the breeding herd is down 0.25% from last quarter and approaching 2% lower than a year ago, both again well below the range of pre-report expectations. It's the smallest breeding herd since September of 2014, and the June to August pig crop, which is more than 2.5% smaller than last year, is also well below pre-report estimates. Inventories of market hogs in the lightest two classes are both down more than 2% relative to last year compared to expectations that both would be 0.8% higher, while the heaviest two classes are up a few tenths of a percent each compared to expectations of 0.5% higher for the lighter of the two and 0.5% lower for the heaviest class. Overall, there are 1.7% fewer hogs weighing under 180 pounds than a year ago, which will be the market hogs arriving at processing plants from October through February. The decrease in lighter weight class hogs partly reflects that the June to August pig crop, as already noted, is also around 2.5% smaller than a year ago, in contrast to an average expectation of 0.5% larger, with close to 3.5% fewer sows farrowed, only partly offset by another record 11.82 pigs saved per litter. This is consistent with the nearly 1% annual growth in pigs per litter U.S. producers have maintained over the past 2 decades, which should continue as statistics in other countries suggest further improvement is biologically feasible. The smaller pig crop should lead to similarly smaller slaughter this winter. Farrowing intentions for the fall and winter respectively are down nearly 2.5% and 0.25% from the prior year. Hence, subsequent spring and summer slaughter seem unlikely to be higher than a year ago. The USDA's cold storage report indicates lower stocks of meat than a year ago. Cold stocks of pork on August 31st are down 3% from the previous month and 13% from a year ago. Beef stocks are down 1% from the prior month, but up 2% from last year, while poultry stocks are down slightly from the prior month and a year ago as well. The USDA revised projections of U.S. per capita pork consumption from 50.3 pounds per person down to 49.3 pounds per person in 2025, a level not seen since it was 49.7 pounds in 2015, but then returning to 50.9 pounds per person in 2026. The U.S. exported 552 million pounds of pork in July, or about 3% less than the prior July. Lower shipments to some of our main customers like Mexico, Canada, China, and Hong Kong were not fully offset by increased exports to South Korea and a few smaller buyers. The result may reflect greater beef consumption in Mexico, with their cattle restricted from entering U.S. feedlots due to detection of New World screwworm, but also general concerns about tariffs and trade, particularly with respect to China. Still, all things considered, pork demand both domestically and abroad is expected to hold fairly strong. As such, USDA projections for pork exports remain unchanged at approximately 1.66 and 1.84 billion pounds for the third and fourth quarters respectively, or about 1% and 2% below a year ago, dropping annual exports to 6.98 billion pounds or 2% below last year. Annual pork exports are forecast to rise just 0.3% to 7 billion pounds in 2026. With the prospect for lower feed costs and the likelihood that prices should remain mostly above year-ago levels, profits should persist for hog producers. The forecast presented here is for the national weighted average net price on a carcass basis for all transactions for producer-sold barrows and gilts, including negotiated and contract prices. This net price should be more reflective of what producers receive on average and often averages a premium of more than $2 a hundredweight over the base price, and for the period from July through September averaged $104.13 a hundredweight compared to $110.64 a hundredweight for the corresponding net prices for negotiated or spot transactions, as packers have been chasing cash hogs. In general, hog prices tend to be higher in the second and third quarters, with lower prices in the first and fourth quarters. Consistent with that pattern, prices are forecast to drop to an average of $94.56 a hundredweight for the fourth quarter of 2025. For 2026, prices are forecast to average $91.63 a hundredweight in the first quarter and then rise seasonally to $98.82 a hundredweight and $101.45 a hundredweight in the second and third quarters. However, if greater than anticipated hog inventories are realized, or if domestic or export demand soften more than expected, especially given uncertainties about tariffs and trade, then lower prices may be realized. For the University of Illinois and the University of Missouri, I'm Jason Franken.